Hey everybody, and welcome. Good morning and good afternoon here in London. And we're back at last. We had a bit of a break as I was away, and we're back with another live true scalping stream with the Mohawk Forex teams. Words out while I drink my coffee. It's good to be back, and we've been doing, in this last week or so, we've been doing a couple of small account challenges, mostly using DAX or NAS 100. We're talking about account sizes of $100, $150. So avoiding gold, because gold is always the one that causes most problems when trading a small account, doing to spreads and commissions and stuff and everything. So sticking with DAX has been really successful, and NAS 100 for the US session, and trading DAX during the New York Open as well has been working really well. That's what you have to do, limit yourself to what you use with your margin, and they're the ones. So if you're looking at trading account sizes 300 and below, this is what I recommend if you want to do the true scalping way and trade the opens, the fundamentals. Smallest lot sizes on IC markets is 1 lot size, which is about 10 cents pip. So that's the kind of what we're looking for there, is really to get 100 points per move. Is best part of $10 or so. So it can be done, and already this morning we're already 15% up on our account, which is really good. And usually what I've been doing is when you get to 50, is if you want, you can just take that out, draw it, and start again and keep practicing. And the more you practice with a small account, you know, the more of a disciplined trader you become. It teaches you that you can't take bigger risks that you would in a demo account or with more money. And yeah, it might stop you taking some opportunities. Overall, it keeps you disciplined, and you're just looking for the best positions, best entries, and you're not staying in the trades too long. You're just getting some green, as they say, and getting out again. So today we missed the Euro Open actually, because we had a nice break here. We had our breakout zone, which I highlighted here, and on the Euro Open we had a nice run. We missed that. Not to worry, there's always another trade, and we went in on the London Open, bagged a few buys in this London Open, and we bagged a couple of sells back from the resistance level as well. And then it's nice drop down, another nice buy, bit of a nice W pattern there if you're into the wave, and price reversal, little drop, and now I just a drop. Some minutes ago, guys, we're waiting here for this US goods trades balance news, which you can see on the coming up in about 5-6 minutes, backed up with retail and wholesale inventories. So when it's all backed up together, it's high impact medium, we should get a bit of a movement. At 2 o'clock we've got the Schiller home price index, which might or might not do something. It's out at an unusual time this time, so we'll have a look at that. And then we've got the New York Open at 9:30 AM obviously, and then at 10 AM New York time, we are looking at the consumer confidence report for June. Again, that should be a good one. And then you've got the Fed speech later on tonight, another one. And then API crude oil at 9:30, which we'll look at time, just half an hour after the markets have shut. Okay, so it's quite a nice packed day this morning. The reason that the DAX flew up here on this Euro Open, as you can see, was this consumer confidence report that came out at the same time. So you could have hedged on that one there, and then obviously the drop with the French one later on. But so yeah, fundamentals tend to lead the way, as we know at the moment, with what's going on in the world. And this is what we're using as our kind of catalyst. When you've got a small account, you need to be trading where there's going to be some kind of fundamental push or market open, because you want to get in and out. You can't afford to be risking too much stop loss. You can't be risking too much holding a trade. You need to be doing multiple trades, getting that 10%, which is what you're trying to aim for, and then go the next day. So if you can make 10% on your account, which most people you do in a year, but you make that a day, then that's good going. And the account size is irrelevant. As we know, you just trade the same system when your account size is bigger. But the whole idea is to practice being disciplined and looking for better positions and not taking so risky trades. Obviously, you can blow your account quite easily if you use a stop loss, 9 or 10 bad trades, and it's probably all over. But you go again, reload your account with another 100, 150, you go again, go again, go again. That's how you end up getting profitable, by learning from the mistakes make trading a small account. So anyway, here is the DAX setup we're looking at, and NAS, as you can see, obviously been in a nice range, and this might or might not move on this goods news. It's bearish at the moment. I'm looking for a tasty sell here already. You've only got 4 minutes to the news event, so you don't want to be in any trades when any kind of major news is coming out. But you're either avoiding it if you don't want to trade the fundamentals, wait till the news is all played out, or trade it like we do. So see which is the best setup. Both looking good. DAX is down to our pivot, daily pivot, resistance. I'm going to give it about 10 so, and on the NAS, pretty much the same kind of setup really. They're both, we're in a bear market. We had a little bit of a bear rally. Overall, we're still in a bear market, remember. So, hedging on sells rather than buys is always the way at the moment. But we'll take any pullbacks. You can see a nice little indicator there, nice little sell signal. That was a nice win on DAX. So we've got a couple of minutes to go. On IC markets, leverage is 1 to 500, which it has to be when you're using such a small account. Maybe people go higher than that, but I try to stick to 1 to 200, 500. And we'll just watch and see what plays out. Like I said, we're not necessarily going to jump in straight away. We will wait and see where the RSI is going to go and what the result actually does, whether it takes the indices in the reverse direction to the news result or goes with it. Bloomberg is also on the background.
UBS, Morgan Stanley, Nomura, Barclays, Deutsche Bank, Natixis, Bank of America, BMO Capital, the list goes on and on, Tom. ING, Pantheon, AXA.
China is up at the moment, obviously, because they've eased some of their COVID restrictions, which is good for people trading.
All of these banks looking for a 3 handle. The median has a 4 handle, just. But Tom, that's the picture for Chinese growth this year. It has changed in a material way over the last couple of years. People are looking for something we haven't seen in a long, long time.
The run rate is 6%, let's say, and you're going to have it to 3%. And then what does that mean for the Pacific Rim, just for starters, John?
I say we've got to watch out for our neutral support zone. Always watch out for this area, because you can always get a bounce on this. The news might push it down and bounce up. So yeah, and RSI is 18 on NAS and 27 on DAX, so it's similar-ish.
Consider that a global economic recession, Tom?
Absolutely. There's no question about that.
Michael Froley is going to join us next, the chief US economist at JP Morgan, looking ahead to Chairman Powell tomorrow. Some ISM data, PCE data, A whole bunch of data coming up this week from New York. This is Bloomberg.
Remember, we're on a 3-minute time frame as well with our axe trading system, which is unique to our team. Unique to us, at least. Have a look, see what we're going to get. 10 seconds, everybody. Let's see if we get a move on DAX or NAS. Results to come out. It's good on the trade balance, better than expected.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning
Worse than expected on the inventories, as you'd expect. Wait and see. Let's see what the move's going to be. Move.
What are the effects of mix and matching between vaccines?
That news.
Capabilities of antibodies.
Really, we're looking for cells here.
In neutralizing Omicron, because as we know, many parts of the world use different types of vaccines, and that would be a great data to look at. It will be also great to look at.
Actually, just sat in that support zone, so we want to wait and see. Look, RSI just kicking up from the 28. NAS again ranging around, no move yet.
So it will be really good to look at large scale data of the ability.
So they don't always move.
To neutralize this variant.
And usually with DAX, it will go the reverse of any US news before the market open.
Still uses ACE2 receptor as its main entry.
But no kind of big momentum move there.
Which are designed with spike in mind.
It could be a non-trade. But like I say, we've got the Schiller
Different receptor other than ACE2.
open price news coming up
So I think that
in 28 minutes time as well. So
got from all these studies which came
see
recently.
going to be any movement. They're both sat on the neutral support. That's the danger area, and it's always the way, but you just can't risk taking a trade when it's in that zone. Bouncing off that. They usually I'd expect it to break. Got 1 minute left on this candle. Good trade balance, yep, below. Inventory's lower. Lot. Real big move yet.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Zoomed in a bit.
Live from New York City this morning. Good morning to you all on TV and radio. This is Bloomberg Surveillance, and here is your price action. Equities elevated through most of this morning. We stay that way. Just up 0.25%. The move fades in the last 10 minutes or so. On the Nasdaq 100, up just about 0.1%. Yields backing away from session highs as well, in and around 325 briefly, up by 2 or 3 basis points now to 323. In the commodity market, Tom, that fades too. 110 on WTI, up by a little more than 1%.
Let's get right to it here with a VIX 27.01. Michael Ferroli is the chief U.S. economist at J.P. Morgan. The world stops at 7 p.m. on Fridays when he and his clan...
Go left, you see here, look, here's our price reversal from last time. Is it going to do it again, or is it going to break this time? This is what we're waiting to see.
Prospects on Friday change with the anticipated PCE deflator statistics hours before.
Yeah, we'll have to see what kind of data we get between now and Friday.
Still in the zone,
Where
25.
a lot
Still
of that is already
dip back
pushed down
down.
by the CPI and the PPI.
Risky
I'm perhaps
trade
a
at the
little more
moment.
interested
Nothing.
in seeing
There's
what
no
we
movement.
get
No
with the jobless
momentum.
absenteeism report. I think there has been some signs that economy's losing a little.
And like I say, sometimes that happens. Both quiet.
You know, a little more worrisome than others. So I'm going to want to see what the activity data we get Thursday and Friday.
Is the character of a growth recession not an outright NBE?
So if we're going to be taking a sell, we want to see it break below. Out the new support. Finish below.
Is that about a domestic
Not just false break like this could be. We want to see actually finish below.
Component folded into it.
I think it's more about the domestic economy, but I would point out that the real trade-weighted dollar is up pretty significantly. So we are going to be, you know, essentially having some trouble, I think, with external performance as well. Perhaps that's one reason why we are seeing some of these signs that the factory sector is now following the housing sector lower. So I think it's going to be mostly driven by Fed policy, intended Fed policy, but I think some of those effects will be felt globally. But, you know, we'll have to see how much global growth also slows. Obviously, Europe.
40 seconds left.
That's not going to help, but
DAX
so
is
far
trying to do the same look.
Controlled descent in Europe.
Michael, earlier in the show, Tom was talking about a really important point about the deceleration of inflation not being enough. And at what point does the Fed say, okay, we're good. We can allow things to remain a little bit hotter than they had been over the past decade in terms of inflation.
We bounce back off the resistance. That's why support neutral zone. That's why you've got to wait. The next candle, 20 seconds. Don't rush in.
I think they are.
It's just a false.
2%, maybe not in the near
Both
term,
look, both exactly the same.
And I think in my mind, one of the big debates right now, or big uncertainties, is the Fed has been talking about essentially taking an outcome-based approach to fighting inflation, which is to keep raising rates until inflation gets close to 2%. That would be a change from past procedure where they were more forecast-based. So if they were, normally you would think if you saw the unemployment rate rise and payrolls decline, then you would wait for the effects to follow through in spending.
That's again ranging.
So I think that, that's a big debate right now, is whether if we do see further weakening in activity, is that enough to get them to dial down the pace?
Momentum anywhere, look.
Or are they going to just keep going until we get back down to 2%?
Michael,
I tend to think they'll be a little more forecast-based.
So based on what we're hearing,
Doing
and
here to
based
break
on
is-
the discussion about the R word that we had last
Bounce
week,
back.
it seems to have faded a little bit with this consensus for a softish landing. What are you seeing in terms of a recession probability, not with respect to a downturn or some sort of technical definition, but in terms of the nature of how prolonged that downturn could be?
So it's not our baseline scenario, but it is obviously very elevated. We don't think it would be a very severe recession. Certainly, there aren't the types of imbalances we had in 2008. So we don't think it would be a severe one, but it could be a long one, particularly if in that recession the Fed once again is pinned at the zero lower bound, in which case they wouldn't be able to provide.
Yep, definitely sit on hands time.
Generate a speedy recovery. So I think it should be a shallow recession, but it could be a bit longer than normal.
How does the dollar break? Everyone has been, not everyone. We got to be careful here, Michael. But how does the dollar give way? The resilient dollar has been a lonely and very successful call. How does it actually give way?
I think the simplest way would be for the Fed to feel a little more comfortable that they are achieving their goals and that they don't have to be quite as aggressive in raising rates. I think that would be the simplest way you can get the dollar to cool off here.
Okay, I need a single point estimate, Michael, because no one's, it's just you and me. But if the inflation trend comes down from 8-9%, where's the kink in the glide path where the Fed changes its dialogue?
Reversing back
Is
up.
it at 5%? Is it at 4%?
In there yet.
There's got to be a point where they shift the rhetoric.
So I would tend to think of it more in sequential terms. I think if monthly, core CPI numbers come in under 0.3, then I think they can.
Okay, interesting.
Yeah, I think they can dial down.
We're speaking with Michael Feroli of JP Morgan as we head toward earnings, particularly kicking off with the
The
big
VWAP
banks.
line you see is getting near
we're
as well.
noticing that capital markets have been slowing down in a very dramatic fashion. We've seen certainly financial market conditions tighten, but you can see in the IPO market, which is just a fraction of what it was last year. You could see it in the high yield debt market, just a fraction of what was last year. How much is that going to pose some sort of credit issue that does get the attention of the broader market in a new way? How much do you see signs of that being a risk?
So you're obviously seeing slowdown capital market activity, but we're not yet seeing any elevated signs of credit risk that would suggest a problem there. So I think I'd want to distinguish the activity from the actual credit risk. Obviously, if if the economy does slow sharper than expected, then we have to revisit that conclusion. But right now it looks.
That's got a price reversal. Again, you need to wait for the break of the trend line on that.
Despite some of the tightening, because a lot of companies have extended the maturities, does that mean you could see much worse financial markets performance than the underlying economy? Because the Fed tightening is aiming for reducing.
Like I said, we've got the Schiller having news in 20 minutes, so
might not trickle into the real economy.
watch on Bloomberg. No trade at the moment. That's the way it is. You've got to pick your moments.
And based on the fact that a lot of people are removed from that activity in some sort of direct way.
So look, I think we got to keep in mind that there are several channels of monetary policy transmission, and I think in each cycle, some are more potent than others. I think we've already talked about one, which is the dollar, which I think will be feeding through into the real economy. I think we're starting to see that also feed through into weaker import prices. I think we're seeing the mortgage rate effect already having a pretty pronounced effect on housing activity. So we got to keep in mind it's not just one channel through which monetary policy operates. I do think we're seeing, and of course some of the wealth effect too, since the beginning of the year. So I do think that there are definitely real channels that are still operating, and I think you're starting to see the fruits of that in slower economic activity.
A bit of tasting fruit, that's for sure.
Mm-hmm.
We're going to leave it there. Michael Feroli there of JP Morgan. Mike, wonderful to catch up, sir. Thank you very much. Just getting some headlines from Jake Sullivan, Lisa, the National Security Advisor to this president. We've talked a lot this morning about maybe some contradictory goals, some objectives over the next couple of days for G7 leaders. On the one hand, at the G7, they're exploring these oil price caps on Russian crude. On the other hand, they're set to label China, what was it, Lisa? A systemic what? A threat? Systemic challenge?
Systemic challenge. I'll get the exact wording just to make sure. But this has been an issue and a complete about face of prior communique because they haven't really mentioned China. But sort of parsing out what you've pointed out, which is the really important trading partnership that they have with China. And I'm talking about they being all NATO countries. But also, how do you not poke the bear too much at a time where you're trying to sort of get them to come along with you?
And how do you introduce an oil price cap on Russia if you antagonize China, which you need to be part of that effort, otherwise it just doesn't really work. What we're hearing from Jake Sullivan, and this is why this is worth mentioning, is that they've started discussions with India on price caps. That's something Anne-Marie mentioned a little bit earlier this morning, Tom. You need to get India on board, you need to get China on board. It's a big, big effort.
That's where I wanted to go, John, is all of this is futile because of India. I mean, there's a triangulation here. It's always been that way. I mean, it's been that way back to, I'm not going to say World War II, but certainly back 30, 40 years. You try to go China, Russia, Russia, China, China, Russia, and then you've got the elephant in the southern room in India. It's more complex.
It's highly complex. And Lisa, for that matter, I think a lot of people doubt the likelihood that the G7 can come up with something that in practice will actually work and be effective.
Yeah, just to highlight how complicated things are. Jake Sullivan also talking about the tariffs. Remember the tariffs from the Trump era that were put on Chinese goods? There's been a lot of discussion about removing some of those tariffs in order to alleviate some of the price pressures, since they basically increase the prices for the end
A
consumer.
nice power move cross here.
How do you send a message? What message are you sending on one hand if you want to, for the own benefit of the U.S. consumers, remove those tariffs, but you also want to send a message? It becomes very complicated.
Lisa, it's beyond complicated. You want to call them a systemic challenge at the NATO level. At home, you've accused them of genocide. And at the same time, you're going to remove some of those tariffs because you're facing domestic pressure politically because inflation is too high. Tom, foreign policy has become a big, big issue, and they've had to backtrack on several issues on the foreign policy front on the international stage. because of domestic inflationary pressure.
No, it's the same look. There's your price reversal. There's a signal, but again, you're right tight against the breakout zone here, so you don't want to be taking a trade until clear any of that zone.
Adults that I listen to, John, are talking about the military expanse of the
They hit that and could come back down again, forming a nice little W pattern. As you
doing in the Western Pacific.
hang on that and wait.
Was brilliant on this. I'm going to say 2 months ago. What's the plan to reaffirm showing the flag in the Western
See what happens with the killer.
Okay,
15 minutes to go on that.
Easy to fix headlines about Russia.
Yeah, I'll reaffirm this. We're in the cheap seats. This is a really difficult job. Really difficult job. This is highly complex stuff. Futures up 1/3 of 1% on the S&P. Yields high by 3 or 4 basis points. Your yield on a 10-year, 323.57. Bob Dolliff Crossmark joining us at the opening bell on Bloomberg TV. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. NATO is set to label China a systemic challenge when it outlines its new policy guidelines this week. Bloomberg's also learned that the US-led alliance will highlight Beijing's deepening partnership with Russia. Still, NATO won't go as far as to call China an adversary. A Russian missile attack on a shopping mall in central Ukraine has killed at least 18. Authorities say dozens more were wounded and more than 30 are still missing. Group of 7 leaders meeting in Germany called the attack a war crime. And British socialite Ghislaine Maxwell finds out today if she will spend the rest of her life in prison.
Wow.
In Manhattan, a federal judge will sentence Maxwell on charges that she engaged in a scheme to lure and groom young girls for sexual abuse by former boyfriend Jeffrey Epstein. Prosecutors want a sentence of 30 to 55 years. And the push by Goldman Sachs into consumer business hasn't been cheap. Bloomberg's learned the firm's internal projections show losses from the business accelerating to more than $1.2 billion this year. The losses stem from the addition of new business lines, pandemic effects, and higher expenses. Plus, new accounting rules will force Goldman to set aside more money as loan volumes grow. And Credit Suisse is seeking to emerge from 2 years of scandal and losses as well. The Swiss bank is promising to boost its
Get a nice little W pattern.
clients and cut costs by simplifying technology. Credit Suisse plans to grow its wealth management unit by focusing on priority markets such as Hong Kong and Singapore. Global news 24 hours a day on air and on Bloomberg. Quick take.
Where we started in Asians,
journalists and analysts
broke Euro Frankfurt, broke again for London, pulled back. Has been ranging, now back down. "30 minutes this news." There's the VWAP for the day. You see price bounced off it, bounced again. Breakout lines. We want to see a move above here for buys, low here for sells. Need to sit and wait. Just really did anything market, but where it came out, look there. So sell really didn't do anything.
His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity.
As the same again, look, slight movement up to the upside, but again nothing major, still bearish overall. Little pullback, and again we can mark the news as a small sell, but really didn't do anything. Didn't even get mentioned on Bloomberg.
This is Bloomberg Daybreak
There we've got the Killer, and then we've got the New York Open, then we've got the consumer confidence. So it'll be interesting to see how this plays out.
Enhanced search on the terminal to deliver what you need when you need it. Now,
See higher the better.
phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today?
Higher is positive, so it's looking at 21, just slightly down.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Push down, look again.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Thirty seconds to go on this candle.
I think institutions need to be very prudent, focusing on liquidity, dry powder. It's a time to protect capital, not to shoot the lights out to get some great return. Right now we're in, I do think we're going into a recession, and that's a totally different playbook.
Paula Valent, she is the giant of Bowdoin up in Maine, and she has moved to Rockefeller University as chief investment officer after early years at Yale University under the late, great Mr. Swenson. David Rubenstein in conversation with Paula Valent. This is a really, really important conversation for endowment and institutional Wall Street. David, this is a woman with a track record second to none in investment management. Trace the trail from Yale to the stunning brilliance at Bowdoin, and now to the challenges of Rockefeller University.
That's still the same. Nothing really happening at the moment. 9 minutes to go to the news. See if we get anything movement with this one.
She did an internship for David Swenson, who was running the Yale Endowment. She was really liked by him. She helped write his outstanding book on portfolio management. And then she got a job at Bowdoin.
Points away from the neutral.
She managed the endowment. And at Bowdoin, the last 10 years there, she outperformed the Ivy League in every single category in terms of return of every other Ivy League manager, including David Swenson. And she did a spectacular job in the 20 years she was at Bowdoin. And on Bowdoin, her chief, the chairman of her investment committee was Stan Druckenmiller. So she's been a kind of protege of both David Swenson and Stan Druckenmiller.
What's interesting here, David, is the backdrop is the worst bond market that you and I have ever seen. It's been one of my missions of the last 90 days to go, hello, everyone, down 12%, maybe down 18%. How do people like her, and how is she at Rockefeller University adapting to yield up, price down?
Well, she's very cautious. Her view is we're probably heading into a recession, and her view is you don't try to knock out the lights by going for super returns and getting the high-flying tech kind of companies. That's not what she does. She's protecting her downside, and I think she's a very cautious investor. Remember, over the last 10 years, she outperformed every single Ivy League endowment. And last year alone, before she left Bowdoin, she had an internal rate of return of over 50% for the last year she was managing Bowdoin's endowment. So she's quite impressive, and Rockefeller has done very well to get her to be the chief investment officer.
David, one of the big distinctions for endowments where people have been seeing outperformance has been their use of private markets, their use of alternative capital. How has she folded that into the call of a traditional 60-40 to get that kind of internal rate of return?
Well, of course, the Swenson approach, or the so-called portfolio approach, is to use a lot of private investments, and she did that as well. The trick she had was that getting into these best funds, because Bowdoin wasn't as famous as some other organizations or universities, and so she had to talk her way into some of the best funds. Inevitably, the marks will come down for some of the venture funds, and probably therefore she and some of the other Ivy League endowments won't have as good a return this year as they had last year. On the other hand, her returns are so good, it's not likely to go down all that much, in my view.
How much is she actively trading into a time of such uncertainty versus having a long-term view post-recession that she sees and sort of sticking to her guns on it?
My view is that she doesn't think she should try to knock out the lights by going for things at the absolute bottom of the market. She's very cautious, conserving some cash. She's in some very good funds now, but now she's remaking the Rockefeller portfolio because she inherited it from somebody else, but who was very good as well. But she's remaking the portfolio into something that is more comfortable for her.
Tell us about Rockefeller University. This is not the normal school. I think of David Baltimore in my youth and what he did with mRNA and virology onto the miracle of what Pfizer and Moderna did as well. It's not Bowdoin, is it? No. It's not Duke, is it? They don't have a basketball team, do they?
I don't think Rockefeller has a basketball team that I know of, but it's in New York City on the east side. It basically is an organization that does medical research and health-related research. Right. And it's a highly
Minor news there.
a lot of Nobel Prize.
We're waiting for this killer one in 4 minutes' time.
It's a highly specialized organization. And
If that moves anything.
On its endowment, because the Rockefeller family is not now putting in a lot of more money. So the endowment's very important to that organization.
David, given the fact that you work in the private markets and you talk to these investors all the time, perhaps big and small, how much do you get the sense that they are following in the same kind of path as what we heard?
Everything's ranging. We're just waiting for the open now.
Recognizing that the market is down, whether it's a bear market, a recession, or whatever you want to call it, it's obviously down from the peaks, and people are debating how much longer it's going to be down before it goes back up. People who are very cautious are basically not trying to set records right now. They're kind of seeing where the market's going. But there are some people who see there are great values in the market, and the so-called value investors are now seeing that we're touching near the bottom in their view, and they're going back into the market. So I don't really think the market is likely to go down that much further from where we are. And I think there's enough cash on the sidelines to go back into the market and keep the prices of some of these stocks at reasonable levels. But we're a long way away from being out of the woods, in my view.
David Rubenstein, thank you so much for joining us. And of course,
very interesting.
For anyone within institutional Wall Street and the endowment world, Paula Valent, Bloomberg Wealth, look for that of Rockefeller University, 9 p.m. Tonight. Lisa, I think the deception here is that the Bloomberg terminal is a
3-4 minutes to go. See if this moves anything.
Nuances here with a 10-year
if it ends up being around 21%, it's going to probably not do anything. Around the same, but let's see.
What we're seeing right now is a lack of certainty played out in markets, and the nudginess that you talk about all the time is interesting and important, especially in light of some of the weak liquidity in certain markets. The lack of certainty, how do you trade around this? What are you even trading on? Is it just the University of Michigan sentiment survey, or is it every single Dallas Fed survey, et cetera?
Kay Schiller here.
Both.
Out, folks. You're going to look for that, I believe, at 9 o'clock. Yes, 9 o'clock. And what's interesting, that's dated material. We're going to get the April statistic on Kay Schiller. But Lisa, again, housing up 21%, far beyond what we witnessed in 2006 and into 2007.
Yeah, and even if there is a cooling down in housing prices, it's going to take a long time for the transmission mechanism to find its way into
a report coming out is saying anyone on the consensus, so they've mentioned it on Bloomberg, so you never know.
In the VIX, one of the positive stories here in the quiet, from 32 down to 26.90. Please stay with us on radio, on television. This is Bloomberg.
Welcome back to another.
As is right on that distance in the breakout zone now, so there's no trade on that at the moment, and DAX is in the middle of nowhere, it's waiting for the move. See if we can get something in the next 2 minutes. If not, we'll wait to the open. Simple as.
The Brit gave the home fans plenty to cheer on her way to the second round. A year ago, the 10th seed was ranked 338th in the world. Up next for Emma, Caroline Garcia. And defending champion Novak Djokovic also enjoyed a good opening day at the All England Club. The six-time champion took out Soonwoo Kwon in 4 sets to set up a meeting against Aussie Thanasi Kokkinakis. Djokovic can claim his 21st title at the Slams if he lifts the trophy next weekend, closing the gap with Rafael Nadal in the all-time list. And don't forget, Tennis Channel's daily coverage from London all starts at 4:30 p.m. Eastern. I'm Bridget Condon.
For you, when Ash decided that's
we go. Let's see if the Schiller case Schiller does anything or not. $2.3 20. Was it 23? 21.2. So 21.2.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost that breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in
Yeah, and
the
see
ground.
anything, not really. Move the NAS up a little bit.
And it really increases the kind of biodynamic profile of the soil.
Yeah, and it's going to resist off that.
The recent price spike could mean more farmers going organic for the long term.
Good to map this out though. Really do anything on the NAS.
We are all unique.
Ejected off it, if anything.
Would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
Now let's wait for the open. Nothing's really happening on anything at the moment. All range waiting.
We have flicked the switch there, and really we're going to step by step electrify.
We're going to top our coffee up.
What does that mean? Combustion.
Be back in 10 minutes or so.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Live from New York City this morning. Good morning, good morning. Looking to achieve something we couldn't achieve yesterday. Getting these gains to stick. Equity futures positive. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Live from New York, we begin with the big issue, waiting for the next shoe to drop.
The last shoe to drop that we could see is earnings, second and third quarter earnings.
The question is now on earnings.
It is an extraordinarily tough environment in which to forecast.
I do not think earnings have been well understood.
The market's expecting around 220 peak earnings.
Analysts are sitting there like deer in headlights.
PEs have started to contract.
Something of a consensus that believes that earnings are too high.
There's a little bit of a wait and see.
They're going to have to come down at some point.
The market will have to fall further.
There's very little proactivity among the bottoms-up analysts.
I think it's going to be a challenge.
We just don't see how we don't get a recalibration here.
Joining us now to discuss is Bauer Stocks' Emily Hill and Krishna Mamani of Lafayette College. Emily, first to you. Do you agree that's the next shoe to drop? What happens with earnings?
Yes, I do. We're already seeing forecasts revised downward, and I think it would be actually a surprise if we didn't see earnings, disappointing earnings coming across in the next quarter. So yes.
I want to share that Lisa Shallett quote with you, Krishna, and just really elaborate on it if you can. Economists have begun to cut their top-down economic forecast for GDP, and yet fundamental company analysts are sitting there like deer in the headlights, not knowing what to do with the numbers. Krishna, so much of this seems to be obvious to so many people, yet the downgrades aren't coming through. We're not seeing the cuts. Why do you think that is?
Well, I think the primary reason for that is growth is still decent. The headline, the top line revenues, which have to come down, haven't really started coming down as much. So I can see why the analysts are kind of waiting to see how things will work out. There is a likelihood that earnings go down, but I think in the current environment, unless things slow down substantially, and that's probably not happening this quarter or next quarter, I think earnings would be okay. Even if they do come down, they're not coming down a lot.
Krishna, just to be clear, where do you expect the economic pain to turn up in 2022?
So I think, again, the policy acts with a great deal of lag, and that's something that we have to realize. You know, the tightening that has taken place and what is going to take place in the future, the impact of that is probably more in 2023 than it is in 2022.
Emily, would you agree with that assessment?
I'm sorry, I don't agree with that assessment, because I think one of the things we're seeing is that input costs have risen substantially, and we're finally starting to see declining consumer demand. You know, the American consumer is just the engine that won't quit, and despite poor, very poor, record low consumer sentiment, we'd still seen consumers have continued to spend, and we're finally seeing that fall off. So I think the impact to earnings is going to come sooner, perhaps, than you expect.
Krishna, what's the counterpoint to that?
Well, so again, I go back to the fact that policy, monetary policy, the impact of that on growth and the impact of that on outlook for growth is substantial. But the impact of that on growth itself acts with a great deal of lag. So we are going to see, and you see that in employment. That is, the impact will be there, but it is not going to happen immediately. It's going to happen with a few quarters lag.
Emily, you expect to see the pain sooner. So walk me through where you expect to see that concentrated. Is that a broad-based story across a range of industries, or is it more concentrated for you?
Well, I think we're going to have it's going to be concentrated in consumer discretionary, in the sectors that are responsive to consumer demand. And I do agree that the monetary changes that the Fed is instituting will take longer to reverberate through the economy. But some of this, the impact on consumer demand, look, there's been massive wealth destruction. $15.5 trillion of wealth has disappeared. So this is where, and $2 trillion of that alone is in cryptocurrencies. So, you know, this is somewhat arguable, but with every dollar of wealth decline, consumers typically spend about 3 to 5 cents less. So it's actually been surprising that the American consumer has just continued to spend right through this rising inflation, through this onslaught of bad news. And so I think the parts of the economy that are dependent on consistent consumer demand will struggle, not just in 2023, once the impact of tightening reverberates through the economy, but in the next quarter or two.
Krishna, it's hard to push back against that. Goldman seemed to be on board with it, a range of price target cuts in the last 24 hours on a range of retailers, Walmart, Target, Restoration Hardware. Is there any pushback from where you're sitting against that view when it comes to consumer, Krishna? Then that pain is going to come very soon.
Well, I think for consumer pain to materialize, it won't be because of wealth effect. The net impact of wealth effect at most is probably 1% in growth terms. Where the consumer is going to hurt is when employment starts coming down. And that hasn't really happened. If it had happened, the party that would be most thrilled with that would be the Fed. That certainly hasn't happened. And as long as employment remains good, consumption is going to will remain supported. It's definitely going to soften, but saying that the impact of the wealth effect and the price increases, the impact of that is going to be substantial in 2022, I find it hard to believe.
24 minutes away from the open and Bell equity futures positive, about 0.5%. Nike One stock we've been watching since the close yesterday. That stock is down a little more than 2%. Same old story, China, supply constraints, all of the above. Taylor Riggs has more. Hey, Taylor.
And John, this will get us into that story, right, about some of the supply chain issues, some of the bullishness, some of the health of the U.S. consumer. First, let's sort of come into this thinking about where the strategists are, the great conversation you've been having in the last 6 minutes. S&P analysts, according to a survey that we've done, are actually some of the most bullish they've been in about 20 years. I'm looking on a scale of 1 to 5. If 1 is a sell, 5 is a buy, on average, analysts are about a 4, the highest and sort of most bullish that they've been since about 2002. I think what's interesting when you look at this chart is they're the most bullish in the top quintile for the stocks that are off the most relative to the 52-week high, on average, a 29% drop. So is that a lot about a valuation story, right? Coming in and just thinking that they've sold off so much that they're actually starting to look attractive. Let's end on Nike, where we started. When you think about sort of the Goldman strategists coming in and saying profit margins are too rosy, we heard a little bit of this with Nike yesterday. The health of the North American consumer, which has been the huge sort of bullish story of Nike, falling just a little bit. If that top line starts to fall just a little, how does that impact the bottom line? That is sort of the big question when you think about the equity market rolling over, but profit margins and the profit margin forecasts are steady. How does that work out? How does that sort of divergence go from here?
I'm trying to work out a whole range of these issues. On the one side, Taylor, you've got the likes of Goldman saying things are too rosy, and then you've got Citi saying things will be better than feared. On the earnings front, then you've got JP Morgan saying that the average investor expects an economic disaster. I'm not sure how you gauge what the average investor expects or how you come to the conclusion that they expect an economic disaster. At the same time, Taylor, I'm looking through this in the same way you do. Everyone says things are very gloomy, but I look to Wall Street and it looks very divided. I can still find some big bulls out there on this equity market.
I'll bring you one, maybe Jonathan Golub, right? You know,
sure.
He's more of the quant at RBC, and he said that sort of the indicators that he's looking for, the dispersion in those analyst estimates, aren't there. Once you start to get more of that big divergence, maybe you'll start to show some cracks, but for now, I think pretty positive, according to him.
Taylor Riggs, thank you. Wonderful to catch up. Taylor with us through the hour, hopefully, for a few more times. I want to share this quote with you from JP Morgan's Marko Kolanovic, who said the following: "It's not that we think the world and economies are in great shape, but just that the average investor expects an economic disaster, and if that does not materialize, risky asset classes could recover most of their losses from the first half." Now, it's not for me to disagree with the forecast. I just want to work through the process. Can I get your thoughts on that, Emily, that the average investor expects an economic disaster? Would that be your view?
No, I definitely don't expect an economic disaster. I do think we are in the middle of a bear market rally, and but to Taylor's point, stocks are certainly at a better value than they were at the first of the year. So I'm not a total bear by any means. And I think that for people with significant amount of cash on the sidelines, the next few months is a good time to be gradually putting that to work, especially because cash drag has, 2 years ago, there wasn't a big penalty to a portfolio to holding huge amounts of cash. But no, I'm not expecting an economic disaster. I don't really think that retail investors or American consumers are either. I think you've got very, very record low sentiment, and primarily because of inflation. But I think that the reason we're seeing this very robust bear market rally, which I think could easily continue for a couple of weeks, is because people are relieved that things are not worse than they anticipated. So basically mixed answer to your question there.
Yeah, Morgan Stanley agrees with you, Emily. They think this can go on for a few more weeks, but ultimately it's the reality check that comes from earnings that takes us back down towards maybe 3,400. Krishna, what I'm trying to gauge is how low the bar is going into earnings season. I've got people telling me that the earnings expectations haven't been cut enough. I've got Marko Kolanovic over at JP Morgan and this latest research, which basically implies the bar is really low because the average investor expects an economic disaster. We won't get one, and we can recover the losses of the first half. I guess from your perspective, Krishna, which one is it?
Well, so, when the markets are, or S&P, for example, is down less than 20%, that's from a really high level. I don't think that's the market's expecting a total disaster. I think, and the other point is whatever drawdown that you have in earnings is not going to happen this quarter. What we have is decent employment, decent growth, and that will show through in earnings. If there is an earnings revision, that probably, again, as I mentioned before, probably happens in earliest the fourth quarter, more likely in 2023. And it's not unusual in a significant slow driver for the market still is very much the direction of Fed policy. And that direction of Fed policy depends on the direction of the slowdown that we can see in employment. If that materializes, I think we have a floor. If that doesn't materialize, and if the Fed is committed to killing headline inflation, then we are all doomed.
Krishna, we almost went through a full segment without discussing the Fed, then you spoiled it. We'll talk about the Fed in the next segment, and we'll pick up on that point on what this Fed is actually targeting and what it means for this market in just a moment. Krishna and Emily are sticking with us. Going into the opening bell about 18 minutes away, equity futures look like this, up 0.4%, with some movers for you. Here's Abby.
John, well, behind some of that bullish tailwind that you're talking about for stocks, we have Occidental Petroleum rallying once again on the news that Warren Buffett's Berkshire Hathaway is buying more of the stock, 44 million shares. They now own more than 16% of the company. Some see these consistent buys by Berkshire Hathaway, the stock, by the way, up more than 500% from its 2020 low, as a path for a buyout. Vonage popping as Ericsson says it is fully committed to the $6 billion deal, wants to get this 5G, the motivation for the deal done by the end of July. Wynn Resorts up more than 6%. This is the China travel quarantine restrictions have been mainly lifted, or cut in half, I should say, but that's certainly a tailwind, or seen as a tailwind for Macau, more than 40% of the company's revenue. And then finally, you and Taylor were talking about Nike. There it is, down 2.3% on that forecast for sales for the year being a little bit light, the supply chain constraints, and of course, caution around China, John.
Abby, thank you. Coming up next, ECB President Christine Lagarde taking center stage in Portugal.
Inflation in the euro area is undesirably high, and it is projected to stay that way for some time to come.
That conversation up next.
And we're back. Topped our coffee up, and we've got 15 minutes to go to the open. Yeah, and still nothing's really moved. DAX still in that same kind of range, looking to break the neutral support or bounce off it, and NAS 100 exactly the same, just stuck on that minor resistance level. I just heard we've got the euro speaking very soon as well, and we're going to wait for this consumer confidence and a good report. Wait and see what we're going to get on the open.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this.
Right, 10 minutes to go.
But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods.
And Wall Street to open higher. That means we'll be looking to sell.
About 3% of all the world's.
Know what I mean with the manipulation?
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
DAX bounced nicely off the support zone.
Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts.
Still red 41. Keep the neutral and back by that again. Could have got in for another sell actually there as well. And a coffee. Nice little cheeky sell, but here we'll go. Wait for this break.
Inflation in the euro area is undesirably high, and it is projected to stay that way for some time to come. In July, we intend to raise our policy rates for the first time in 11 years. And we have provided some guidance for our September policy meeting and the rate path that we envisage thereafter.
If you get a chance to read it, decent speech from President Lagarde from earlier this morning, kicking off a busy week of central bank speak. Oppenheimer writing the following: the new week greets investors and traders with plenty to ponder as they measure the power of the rally. Uncertainty remains the order of the day. And Mike, that's not just true of investors, but true of central bankers as well.
Absolutely, John. And it all revolves around inflation. After all, the ECB and Fed have pretty much told us what they're going to do. Lagarde today reaffirming the ECB's base case of a quarter-point move later this month. And last week, Jay Powell, and since then other Fed officials reaffirming the market's view that they could go 75 basis points. However, both of them, Powell last week and Lagarde today, saying things could change if inflation changes. And we get some inflation reports this week that are going to show changes, and they're probably going to show them higher. The consensus is the white line, which is the European CPI rate, is going to go up to 8.5%. For the Fed, the PCE index out Thursday is going to be up 6.4%. So that line reverses direction. Much higher inflation, does that call for a change in monetary policy? Unfortunately, Lagarde and Powell speaking tomorrow in Sintra, Portugal at the ECB's version of Jackson Hole. They are going to be on a panel with Andrew Bailey of the Bank of England and Augustine Carstens from the BIS, and our Francine Lacroix will be questioning them about their plans, but they won't have those new inflation numbers in hand yet, so we may not get a change in plans announced. But Lagarde did make some news today in Sintra, John. The ECB Friday will begin reinvesting proceeds from a runoff of its QE securities in a manner they call flexible, which means they can use the money to buy securities in specific countries to help prevent a possible debt market crisis as they raise interest rates. You can see in the little box there, Italian rates.
10 minutes to go.
German rates earlier.
Nice reversal on DAX here, indicator.
And they're afraid that we could see a replay of 2012 when spreads really blew out. The flexible plan, one way they're going to.
Again, it's got a break.
A lot of people think it won't.
What happens on the open? Shoot up and come back down again.
Staff to come up with
wait and see.
Plan. She offered no details
that.
Today. Maybe that is something.
I'm not taking any trades yet.
Yes, tomorrow.
What a panel we've got coming up tomorrow. Mike McKee, thank you for that. Francine Lacroix, as Mike McKee pointed out, sitting down with Chairman Powell, President Lagarde.
No trade day.
All at the same time.
That's what sometimes happens when you have a small account. You just got to say pick. If there's no movement, you don't trade. Simple as.
Your point is an important one. Trying to work out what they're targeting and what they're willing to tolerate and what that should mean for your outlook and for where you put money to work. Can you run me through your thinking right now, Krishna?
Sure. So the Fed is on a tightening path. And the question that you have to ask yourself is, what is it that the Fed is looking to do? If the Fed is looking to contain persistent headline inflation, that will probably run into 2023 easily. So that means that they will be on a tightening path for a much longer period of time than what the market is anticipating. If that is the case, the risk for asset prices is significant. Having said that, I think it is quite, or it is more likely that what they are targeting is basically employment costs getting contained. That is unemployment going up and wage pressures moderating. If that's the case, then they may keep rates high for a long period of time. They may not cut, but at the same time, the pace of tightening may not be as high. And if that is the case, then we have a bottom in sight in the fall of this year.
Krishna, is that just a guess, though, trying to work that out? How much of a guess is that? How much of an educated guess is that?
Well, it is an educated guess. You know, the Powell at the moment continues to talk about headline inflation and how that is what they are targeting. Yeah, but if that is the case, they very well know that the likely outcome of continuing to tighten to what Larry Summers may be asking, 5-6% at the policy rate. What we are talking about then is a very deep, severe recession that they would have a tough time coming out of. And I don't think they want to be in that situation. So it's an educated guess. They haven't articulated that policy, but that is what the markets are discounting right now.
There is a fear that they have to inflict some real economic damage. A fear that they have to inflict damage on this market too. We caught up with Greg Peters of PGIM earlier this morning, who said he's betting against easing financial conditions. He thinks they need to worsen. Emily Hill, given what's happening with the world and the objective of policymakers right now, I would ask myself whether it's the right time to own an industrial. But you like Honeywell. That jumped off the page to me, Emily, and I wanted to give you the chance just to run through your thinking there before we close out this segment. Why Honeywell?
Well, it's the highest quality industrial conglomerate in the world, arguably. And it really hadn't done that well, frankly, post-pandemic. And it's positioned to take advantage of all sorts of innovative trends. And I'm not talking about buying Honeywell, by the way, for 3 months. We don't do that. We're long-term investors. But, you know, you collect a yield, you've got a very, very high quality company, well-run company with an excellent balance sheet, and you're frankly investing in a company that does you know, warehouse automation that is highly leveraged to ESG trends. And so I think it's a good time to invest in just very high quality large cap value companies, whether they're industrials or not. Now, for the most part, we do prefer sectors that are a little bit more defensive. So utilities, consumer defensive, but Honeywell is the exception.
Emily Hill, I wanted to talk about that exception with you. Thank you for going through it. Emily Hill alongside Krishna Mamani there. With equity futures up about 0.5% on the S&P 500, on the Nasdaq up around about 1/3. Coming up, the morning calls, and later, investors looking for the bottom of this market. We'll catch up with Crossmark's Bob Dole at the opening bout from New York City. This is Bloomberg.
Here we go. As is going to do on the open as well. Minutes to go. Go up and down. Get ready. And then we've got the news in 30 minutes, the consumer confidence. Hopefully we'll trade NAS with that. Get one trade away. See what we can get on the open.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Ready, everyone.
5 minutes away from the opening bell in New York this morning. Good morning. Equity futures just about positive on the S&P 500 up 0.4%. On the Nasdaq 100 up a couple of tenths of 1%. The bottom for the Nasdaq 100 June 16th. 2 days before that, the top for bond yields on 2s, on 10s in a similar period. Your 10-year right now way off the highs of the year so far, which were 350 a couple of weeks ago, but backing up again just by a couple of basis points to 321.30. Earlier this morning in and around 325 on 2s right now, 311.37 yields in almost a single basis point. Lisa earlier this morning went through some of the auction supply that you need to look for. The 7-year coming from the Treasury a little bit later. That's the story of the bond market. Here are your morning calls. First up, UBS downgrading eBay to neutral, expecting shares to underperform until investors have better visibility into future growth. Your next call from JMP Securities naming MGM Resorts its top pick within the gaming sector, highlighting the rapid recovery in Las Vegas. That stock is up by more than 3%. And your final call from Evercore, cutting its Apple price target down to 180, seeing headwinds stemming from a strengthening US dollar and slowing PC demand. That stock just about positive, up 0.4%. Coming up, Crossmarks, Bob Dobb says earnings estimates are too high. He's not the only one saying it.
Okay, everybody, get ready. Got 40 seconds. Wait for a move.
On that story next. Your opening bell just around the corner.
We're going to get a move to the upside and then a read back our breakout zone. A nice W pattern there, nice second leg M, look, you can see little W forming as well now. Good. Go with the open. NAS. Down, look, NAS. Back to the neutral. Sell.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars,
Bye.
we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Back.
Can ESA help humanity take its next giant leap?
That's spiking both ways now, look, up and down. Look at that, beautiful. A nice little $5 on that. Still beautiful. Easy buys. Change that to a nice sell, then a buy.
It's really a reminder, isn't it, just how
There's one
sensitive
round.
markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
That's the kind of spike you want to move on.
25 seconds away from the opening bell this morning. Good morning to all. The state of play looks like this. Positive on the S&P by 0.4%. On the Nasdaq 100 up 0.2% on the Russell, up around 0.8%. We sold the open yesterday pretty quickly. Let's see how this plays out. Right about now, that's your opening bell. Switch at the board and get to the bond market. Your 10-year looks a little something like this. Off the highs of the day, up a basis point on a 10-year, 321.49. In the FX market, some dollar strength in the mix in the last couple of hours. 105.30. Euro dollar negative 0.5%. Going into an interesting week for data on both sides of the Atlantic. We get some Eurozone PCE data on the US side and CPI data on the European side, and an ISM print on Friday on the US side as well, and a ton of central banks speak, so take your pick. At 1.1% on WTI crude, 110.80. China easing some quarantine restrictions, seemingly opening up this idea that we get more demand for commodities. We can talk about that through the day, no doubt, on Bloomberg TV.
Beautiful move. They go over $15 on the buy. And a successful open, nice and easy. Just have to wait.
Better open here relative to yesterday for stocks, with that S&P 500 up about 0.4%. One stock going in the opposite direction, though, and then we'll take a look at those that are helping. Nike shares are down by about 2%, more than 2%. This, of course, after the company basically gave a weak sales.
Beautiful second leg, a W to the M to W. Perfect.
And of course, the last quarter,
All that.
20% in China, so fears
Hang on.
that weakness could continue. Shares now down about 3%. Goldman Sachs, on the other hand, up 1.7%. They, of course, along with Wells Fargo.
I hope you guys caught some of this. This pretty much has our axe trading system mapped out.
Company's consumer unit, ExxonMobil up 2.3%.
By trading the wave, look, you can see as well.
Optimism around the China travel quarantine being cut in half, perhaps more demand for the natural resource. And then Apple, you were just mentioning that
W.
one of the top point boosts for the S&P 500 today, John. This, of course, is Evercore has cut their price target, but to 180 from 220 on the possibility of dollar strength hurting and currency weakness. But of course, the stock is well below 180. So
hopefully, we should get a pullback to another M.
Thank you. About 2 minutes in, here's the state of play for you. Up 0.6% on the S&P. Every industry group on my screen is in positive territory right now. Having talked about the energy names, Exxon being one. Energy stocks up by about 2.3%. Financials up by more than 1%. Shinali's going to be with us in just a moment. Information technology advancing just about as well, up 0.4%. On the West Coast, let's get to Ed. Morning, Ed.
Yeah, good morning, John. We're up around 0.6% on the NASDAQ 100, although that higher open didn't last very long on Monday, so let's see where it goes. We're also in the last few days of the quarter, right? There's some rebalancing of portfolios, which brings us volatility, but I heard you talking about the bottom on the NASDAQ 100 being June 16th. The other way I'd look at it is that we're still down more than 20% from our March high, and as we enter another corporate earnings season head on, you look at the year-to-date
Beautiful.
technology sector relative to the broader market, the NASDAQ 100.
I hope some of you out there caught those pips. You're not going to get many moves like this. It was actually, as predicted by Bloomberg, the futures and everything looking really positive.
Following the open, China's easing of restrictions and requirements relating to COVID-19 seems to be supporting the market. But the question is still, how do we cope with inflation in corporate America? And once we look at inflation, we go back to the rate story. We're looking at the impact of yields recently. Last week, we had that best week since March on the NASDAQ 100, but that was at a time where yields were coming down. We've seen some yield volatility creeping in the last 48 hours. So I'll give you a silver lining, John, because I'm a nice guy and you're a good mate. At least with some of that trimming we've seen in the technology sector, the weighting of tech relative to the S&P 500 has come down somewhat, but at the index level, we're still hyper-focused on this sector because I want to know what they have to say about the consumer.
You're the happiest man at 6:30 in the morning in San Francisco, that's for sure. Ed, thank you, mate. It's good to catch up, buddy, as always. I promised you we'd talk about the banks announcing a wave of dividend increases following their stress test results. The Goldman CEO, the chief, David Solomon, said the following: our client-oriented strategy will continue to provide a strengthened return profile to dynamically manage capital and remain well-positioned to support our clients. With the latest, Wall Street correspondent Shinali Bassett joins us now. Hey, Shinali.
Hey, John. If you take a look at it, it's actually Morgan Stanley that is rising the most of all the big banks, more than 4%. And that's because they were able to also announce a buyback. With bank shares having fallen so much this year, more than 20% for most of the big investment banks, Goldman, Morgan Stanley, and JP Morgan, investors did want to see buybacks from the banks. But remember, most big banks...
We've got the consumer confidence coming up in 20 minutes, and that'll be the end of the stream. But it's nice when these patterns come together. Look, W to the M to W, perfect, easy to follow. Sell at the resistance level here.
But remember, there was not all very positive news across all the banks. If you looked at JP Morgan and Citigroup, they held their dividends stable. JP Morgan cited a reason why, and that reason being higher capital requirements anticipated ahead. Citigroup has previously said also that this would be a tougher macroeconomic environment. I also have to point out that tougher macroeconomic environment for a second because we did get Jeffrey's results here, trading results. Between both lighter equity, debt underwriting, there was also lighter trading, particularly in fixed income. That tends to be a bellwether for the big banks. So will this year be as good as last year? What kind of capital is there left to not only bring back to shareholders at the end of the day, but also redeploy in the business to keep this year competitive, John?
Shanali, build that out just a little bit more. Just one further beat if we can. July 14th, JP Morgan reports earnings. We've heard the commentary from the C-suite, that hurricane headline from Jamie Dimon. What are you looking for in these numbers in a couple of weeks?
Yeah, is it as bad as even the Federal Reserve thinks it can get? Remember, and
8 seconds to go on this candle.
if you think about it, the Fed stress test really surrounded around the commercial mortgage sector. It's surrounded around
Oh, beautiful.
cards.
What a move.
There are other pockets of the economy. What about the buy side? Where
Going to hit that resistance level.
in addition to the consumer banks that you have to keep an eye on when markets have been this choppy?
Shanali, thank you. And Shanali bringing up Morgan Stanley, just bringing up the stock on my screen, up by more than 4% in the early part of today, 6 minutes into the session. Another stock to look at is Nike, at 1.8% there and thereabouts, raising the losses of this morning. Nike reporting what some consider to be a disappointing outlook amid increasing disruptions in China. The CFO, Matthew Friend, saying the following: we expect gross margins to be in the range of flat to declining by 50 basis points versus the previous year. Kelly Lyons has more. Hey, Kaylee.
Hey, John, yeah, interesting turnaround for the stock here, considering it opened almost 3% lower, but maybe investors clinging to some of the positives, including the growth they saw in the
That's still climbing. Beautiful.
in America. But of course, it was the
All
headlines
left.
out of China specifically that really grabbed focus after this report.
See what level we're going to get back to.
20% in that market due to the impact of
around here. Look,
lockdowns, which Nike said affected 60% of its business there. But I would note also North America was a week.
size 85. They're going to be getting ready for some sells. So you can go higher, but just wait and see if the RSI dips down. It's well overbought now.
Bloomberg opinion says when you look at North America, that may be a sign of consumer demand shifting in the face of high inflation. If you're paying more at the grocery store and at the gas station, maybe you're not going to buy a new pair of sneakers or more.
There you go. It's a nice drop.
That knowledge with the fact that Nike's inventory was up
DAX is 81.
to $8.4 billion. A big reason being there are many goods stuck in transit. So Nike says it's going to do more discounting in order to work that inventory down. And that brings us to the margin point, John. As you said, flat to down 50 basis points. Not the best news. And analysts really are looking at the fact that Nike says its direct-to-consumer business should help buffer margins. Some are more skeptical, including one over at BMO Capital Markets who cut his price target on the stock today. He's not the only one. And I would note that a lot of these headwinds analysts are talking about, China, supply chain issues, margin pressure, are not unique to Nike. They weigh over the consumer discretionary sector as a whole, which, like Nike, is down about 30% year-to-date, underperforming the broader market, John.
Some brutal numbers there. Kelly Lyons, thank you very much. I'll tell you someone who was absolutely brutal yesterday. It was Lisa Shallett. I go back home in the evening and I go over all the interviews again and make some notes. And I really wanted to bring you Lisa Shallett's comments all over again from this program yesterday. Take a listen to what Morgan Stanley's Lisa Shallett had to say.
Economists have begun to cut their top-down economic forecasts for GDP, and yet, fundamental company analysts are sitting there like deer in headlights, not knowing what to do with numbers.
Sitting there like deer in the headlights. That's not Crossmark's Bob Dole. He joins us right now. Bob, let's talk about that. Do you agree with that sentiment, that statement that Lisa Shallett and Morgan Stanley's made?
Look, I think analysts have undercut estimates now for several quarters.
RSI 76. Let's see if this is going to down a little bit.
The economic numbers are coming down, so they're setting themselves up to have to take some numbers down. But I think they'll probably, in many cases, wait until the quarters are released and see what guidance they get for the back part of the year. To defend corporate America, John, you know they've done a great job raising prices to keep up with cost pressures in labor and transportation and raw materials. The question is, how long will you and me and businesses pay those higher prices? And I think we're coming to the end of the rope. So I'm going to agree. Earnings probably are vulnerable here.
So, Bob, walk me through what that means for this market going through this summer and into the end of the year.
Well, I think it means it's going to be choppy. I don't think it has to go straight down. You know, we're in a period where perhaps good news is bad news and bad news is good news. Example, last week, growth was a little bit slower. Some signs maybe inflation's peaking, and the market likes it, takes off on the weak news. So if we get weak earnings, we may offset it by some pickup in PE ratios, which have gotten hammered so hard since the first of the year. So I think we're going to have a very choppy period. I do think short term, we're in our third bear market rally since this bear market started, and it's maybe only half over.
You're happy to call it that, though, Bob? This is a bear market rally, what we've seen over the last week.
I don't think we've seen the bottom, John. I want to see more capitulation. I want to see the VIX climb over 40. I want to see put-call ratios expand. And fundamentally, I would love to see some visibility on potential peak in inflation, peak in interest rates, and some visibility, we're not even close to this one, on the Fed getting the end of rate increases. That's what I'm looking for to get the final washout bottom. I think that's still in front of us.
And let's throw in this one as well. Peak dollar. Do you think we've seen that, Bob? Because looking ahead to earnings season, it could be a
Nas now pulling a lot back. Here we go.
For Nike, it will be for others. It's going to be for Microsoft. They've already talked about that. Are you willing to fade the dollar strength? And if you are, how do you capture that in this equity market?
Yeah, I am, although in all honesty, I've been calling that since the first of the year and been wrong. I think the fact that relative economic growth in the U.S. has been better, our Fed has come to the fore to raise rates faster than other central banks. That's given some resultant and latent strength in the dollar. But I think the dollar is overvalued. We're going to see some weakness. So that tells you you've got to be careful about how many multinationals you have in your portfolio, and make sure you have some non-U.S. The non-U.S. averages are down less than the U.S. so far this year, which has surprised a lot of people, John.
I get nervous, Bob, when a lot of people start coming on saying bad news could be good news, and I just sit here thinking, good news for what? One thing that's jumped out to me, Bob, and I'm sure it has to you, is the amount of people that talk about heightened recession risk, but then talk about a long in energy names through the rest of this year. I just wonder how much longer that can persist, Bob.
I think you're right, and of course we saw last week the energy stocks.
Nas 77.
And the week before.
Look at that range.
Underperforming significantly, and in some ways that's a good sign. Typically, the last thing that gets hit are the strongest stocks. They got hit, although I think the energy story is not over. But you're right. Energy, I like it, and recession in the same sentence are a little hard to fathom.
Bob, just a final one from me. If you had to sit in a pocket of this equity market through the rest of this year with a degree of confidence, can you think of a part of this equity market that you'd like to do that with?
I want to do it in high quality. Earnings delivery, earnings predictability, balance sheet management. HMOs are a good place to play it. They've done better than the market, but that's a place I'd hide. We talked about the financials earlier. I like them too, but was not mentioned insurance. They're some of the safer places too, I think.
Hey, Bob, awesome, as always, to get your view on this program. Bob Dole of Crossmark, thank you, mate, appreciate it. About 13 minutes in, we are positive by 1% on the S&P, on the NASDAQ by about 0.9%. Big week coming up for central bankers and global leaders. Up next, the US and its allies ramping up the pressure on Russia and China.
Our new concept will guide us in an era of strategic competition.
That conversation up next.
If it's going to push down, our resistance is they change from support to resistance.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's almost the end of the year, but Bali is still quiet and empty.
I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dinings, shopping, but many shops here are still closed. Most of the outlets
Cyanide 73.
are for sale as they have run out of business.
10 minutes till the news.
Saya kerjanya di sini udah lama.
Udah
Ada 10 tahunan di sini kerja.
my confidence.
Kalau dulu kan rame. Sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible
Nice,
thing.
dropping beautiful. That's right to our breakout line. Nice sell if you call that.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
So, for all those Republicans in Congress criticizing me today for high gas prices in America, are you now saying we were wrong to support Ukraine? Are you saying we were wrong to stand up to Putin? Are you saying that we would rather have lower gas prices in America and Putin's iron fist in Europe? I don't believe that.
Pretty strong words from the President of the United States, using the international stage to push back against those at home and abroad. G7 leaders now turning their attention to China, calling on Beijing to urge Russia to stop its military aggression and immediately and unconditionally withdraw its troops from Ukraine. This according to the text of a statement. Bloomberg's AMH and Maria Tadeo join us now.
RSI 75.
Bavaria, talk me through what we've achieved in Germany.
Come back to our breakout line just like NASA's done. What we're waiting for.
Well, John, a lot of the stuff that was achieved in Germany is really just setting up the stage for more talks to continue. Of course, there's a lot of urging of on a number of factors. That's for the unity, to maintain that unity with amongst the G7 and its allies, to support Ukraine, to keep the pressure on President Putin, and then, as you mentioned, of course, to make sure they are steadfast when they are combating against China and urging China to lean more towards the West and stand up for Western values and not continue this support, even though sometimes it's behind the scenes with President Putin. Most interesting, which really got a lot of the talk, of course, is this idea of an oil price cap and as well as a Russian gas cap in Europe. Daniel Flatley, our colleague, just wrote a great piece talking about how it's a Rubik's Cube, and the fact that it got into the text that they want to even continue discussions is a big deal. But for this to actually hit the market, it is going to take a number of laborious conversations with the private sector, insurance companies, shipping companies, as well as massive buyers, especially for crude. Beijing being one, New Delhi being the other.
8 minutes to the news.
Being willing to sell that crude.
Final trades.
Allies decide on.
This is question number one for me, Maria. Just listening to everything that AMH has just gone through, how do you achieve that oil price cap that they're looking to talk about without including India and China? And at the same time, the president's going to go from Bavaria over to Madrid, and there's the potential for NATO to criticize China. At the same time, they need China on board to do something about Russia. Maria, can you square that one for us?
I'll move on, Naz.
Well, it's a difficult one to square, but the
Let's buy on the open, as you can see. We could have taken a nice cheeky sell, then the buy, then we've hit our resistance, pull back, a nice power signal. If it breaks our breakout line, and then we're going down. That should be doing the same. Hovering around on that top at the moment, still 76 RSI. Got the power move.
politics. It's a different type of conversation to that in the G7. Jonathan, if I could say, well, in my view, the NATO this year is much more important than the G7 will be. We know that there's already indications from the NATO Secretary General Stoltenberg that allies will say that Russia is, quote, the most significant and direct threat to NATO security. This is not just Eastern Europe, it's now the entire alliance. Remember, they're bound by Article 5. If one country gets attacked, everyone will have to come to their defense. When it comes to China, to your point, they will now say openly that this is a systemic challenge to NATO. The language around it will be interesting. And then, of course, we always circle back to the perennial debate at NATO, and that is defense spending. What the NATO Secretary General now says, and what a change in tune here, is that the 2% of GDP is not the ceiling. It's going to be something that could be extended way beyond that. It's not the floor, it's the ceiling.
Stoltenberg also talking about the progress over Swedish and Finnish membership. Obviously, Turkey has some reservations about some of this, Maria. Walk me through the potential for this to happen anytime soon.
Well, Erdogan is the start of day one here. All eyes are on the Turkish leader. Of course, he says he has some concerns about Sweden and Finland. He says they don't fight enough counterterrorism and terrorist operations. Now, a lot of the critics say that this is just Erdogan trying, of course, to get concessions and time with the President of the United States. But I have to say today, Jonathan, the mood has really shifted from the morning to now. And there is optimism that a deal to include these two countries to NATO may be on the cards by the end of the summit.
Range of headlines from Stoltenberg also on China. Disappointed China won't condemn the Russian attack, but they don't regard China as an adversary. Anne-Marie, I want to leave you with the final word here. What would they describe China as?
Well, they're not going to say adversary, but they are going to say that China is strategically a hurdle, if you would. The exact text hasn't been completely defined yet, Jonathan, but they're getting there. A little bit more pressure on China. I would say it's a huge 180 from the last time we got this text from NATO. In 2010, China was not mentioned, but Russia was, and Russia was mentioned as a partner. And part of the reason why they will not go as hard as saying adversary on China is because the country I'm standing in right now, Germany, they have massive, among other European allies, have massive trade with China, economic ties, business ties, and they want to make sure they could balance these two struggles.
The weak link on two big geopolitical issues is Germany seemingly all over again for many people. AMH, wonderful coverage. I know you've got to catch a flight over to Madrid.
DAX
now,
turn pull down again, look.
And I just get this sneaky feeling I'm missing out on something this weekend.
Low 75.
With the two of you having a very good time. I'm aware. Maria Tadeo.
Never reveal private details, Jonathan, on camera.
I'm not revealing a thing. Neither are you, apparently. Coming up, the Trading Diary. The market-moving events you need to be watching. That'll be next on this program. With your equity market shaping up as follows: a lift up 1% on the S&P, advancing 40 points, up 0.75% on the Nasdaq from New York City. This is Bloomberg.
Seconds left on this candle. Let's push down. By 67.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question.
Great question. Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
"25 minutes into the session in New York this morning. Good morning to you. Last week, energy stocks got absolutely hammered. Yesterday, they bounced back and they're climbing aggressively again this morning by 3.5% rather. So far, up 1% on the S&P. On the Nasdaq, up about 0.7% or so. That's the price action. Here's your trading diary. President Biden meeting with the Prime Minister of Spain in Madrid. That's coming up at the top of the hour. Plus, San Francisco Fed President Mary Daly speaking at 12:30 Eastern. Central bankers in focus. Wednesday, the big one. Powell, Lagarde, Bailey, all on one panel in Sintra, Portugal. Plus, a look out for US GDP at 8:30 Eastern. Personal income and spending numbers and US jobless claims coming out on Thursday.
A minute to go.
And finally, rounding out the week with the big data point of the week. On either side of the Atlantic, you get ISM manufacturing numbers in the US. And over in Europe, you get Eurozone CPI on Friday too. From New York City, that does it from me. Thank you very much for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
"13 seconds left on this candle. Looking for this M pattern to start forming. Might be thinking. Go. Consumer confidence. Richmond Fed Manufacturing Shipments Index. Quite a few little results coming out. What's consumer confidence going to be?
One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Pushing down.
Has enhanced search on the terminal
Break that zone. There could be another sell high on NAS.
Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Break this zone. And down.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest
Nice drop, beautiful. There you go. Well done, nice sell to end the day with. And consumer confidence was the reason why. As you see, they're synced up perfectly. Great stuff. Well, we're 25%, so well happy with that today. Thank you so much for bearing with me. It's quite a quiet one, but like I say, when you've got a small account, it's difficult. You've got to pick your moves. We'll wait for this bounce and see if we can get another sell back on here. But a nice win on the consumer. And we're up. Excellent. Right, well, hopefully we'll be back tomorrow, and then we'll be back next week for NFP, of course, next Friday as well, week on Friday. So, but thank you everybody for joining me as always, and until the next live stream, take care. Remember to go to the website www.mohawkforex.com and give us a like down below if you stayed with us. Until the next live, take care, trade safe.